Absa Bank has posted a 5.6 billion shillings in profits after tax for the first half of 2021, representing a 486% growth from a similar period last year. Now, the lender's revenues equally edged up 6% during the period under review. According to Absa Bank's CEO Jeremy Awori, the growth has been largely driven by growth in interest income derived from a lending to MSMEs despite an uncertain macroeconomic environment as a result of the COVID-19 pandemic. During the first 6 months of the year, the bank's loan loss provision dropped 63.9%. To this, even as the bank regularized 94% of all loans that have been restructured in 2020. The gross non-performing loans increased 7.8% to 18.3 billion shillings. The lender has projected a better performance for the remaining half of the year, albeit with caution due to potential delays due to COVID-19 containment measures. It is not clear, however, whether shareholders should expect dividends at the end of the year, despite their earnings projected to significantly improve in the second half as the bank eliminates the exceptional budget earlier set for rebranding.
We had 62 billion of loans restructured, almost 60,000 accounts, which is significant. I mean, that's 30% of our balance sheet and 40% of our loan accounts that were either given moratoriums or restructuring. And we believe that really made quite a significant difference to the survival of those companies. And we're glad to say that when we look at the book as at the end of half one, 94% have regularized their positions. And we're seeing ourselves driving our non-funded income growth, especially not just through channels, but also through our new businesses that we've set up, businesses like bank assurance, brokerage, etc. So we're quite encouraged, and we look forward to the total income growing further on the non-funded side. Bank assurance is one which is growing very strongly, and we see lots more opportunities for us to be able to grow that even faster in the future, and we're making strong investments in that area. We've invested in an asset management business, revenue growth and dividends. Like I think was mentioned by Yusuf, we're really at this point sort of cautiously optimistic. We're encouraged by the early indicators that we're seeing from the economy, and assuming that those continue to improve, and our business will obviously benefit and grow in line with that and the opportunities that I've talked about. If that happens, then we're quite optimistic that we will definitely see a return to dividend payment.